Today we are here with one of my dear friends in business, but in life, most importantly. And I'm so excited to talk to you today and to have this conversation. The goal here, just so everybody knows, we were just talking. He just asked me, so what's the goal? And a lot of the time we see entrepreneurship and success, and we're going to talk about what that means, and all of these things, and making lots of money and running a business or whatever it is. And we don't ever realize what it takes to get there. So I am very lucky. We started in business around the same time, 2018-ish. And we were new to we are in different industries. So I'm in finance. David here, who I'll introduce, is in mortgage. And we were new. And we kind of went through it together, like the ups, the downs. And so today I wanted to just have a real, raw, open conversation with you about what it takes to be successful, what that even means, because I know your definition has changed over the years and seasons. And just like someone who's going through it, because right now everybody is either like starting in the grind. You know, we're about to go into some crazy times. So people want to start a business. They want to leave their job or they don't know how. And people are kind of hungry for more right now. And you've been through it. And what better person to learn about it than somebody who's been through it. So maybe just tell us, guys, this is David Honda, a very close friend. I trust him with my life, my family. All my family and friends are your clients. It will always remain like that. But more importantly, we got to kind of go through the ups and downs of business and entrepreneurship together. So would you start by telling us a little bit about your story and where you came from?
Absolutely. Thank you for having me.
Of course.
And the whole process kind of started with, it was literally a coin flip of how I got into the industry.
Hey, you never told me the story.
I know, right? I flipped a coin. And at the time when I was floundering from a new company that I started to another job that I was working to something that I was doing, I was like, I'm just not happy. I can't find what I'm doing. I just
what were you doing?
I was doing financial achievement, looking for like a private investigator for doing financial, looking for literally buried treasures, kind of like what we're doing.
Okay.
Looking for people who have money lost and that's the state of California was holding for them. So I was tracking people down to, tell them that they had their money.
Okay.
Interesting story, but for another time.
Never knew that about you either.
So then, my wife at the time, she told me, she's like, hey, well, we're pregnant. And I'm like, oh my God, here we go. So we've got one kid already. We've got, a condo, we got a mortgage, and she's now pregnant with the second kid. And she's like, why don't you get something that's a little bit more stable than this, this side hustle job that you've got going here? Cause it was really inconsistent. So, I don't know why. I flipped a coin. I said, let's get into something that's stable. Let's go real estate.
Stable.
Yeah, let's go real estate.
What was the other side?
So one side was going to be, I said I was going to become a lender, a mortgage lender, or a realtor.
Okay.
And so then when I flipped it, it landed on mortgage lending. And I was like, okay, well, let's see. Am I going to go do commercial or am I going to go do residential?
Flipped it again?
Flipped it again. And so on two flips, I ended up where I'm at. And it's supposed to be where I'm supposed to be, right? So I flipped the coin, ended up in mortgage banking, went online, typed it in NMLS. Okay, cool. How does this work? And within 11 days, I had the examination material done. I studied for the next 10 days, and 21 days later from me flipping the coin, I was a licensed mortgage loan officer.
That's what we call grit around here. A lot of people get stuck, even just overwhelmed by the information. So you just got it done. You're like, this is what we're doing.
Yeah, just
making a decision is big.
Asian life skills. Go to the library 8 hours a day, crank it out until you memorize everything, and then just go take a test.
Fair.
Did that, and 21 days later, I was licensed, and I started knocking on doors. That's kind of my history.
Okay.
I can knock on some doors, and I started knocking on every financial lender in the area, and I was like, hey, you don't know who I am, but I'm a hustler, and I'm going to show you what I can do. So give me an opportunity, hire me, and let me get to work and show you what I can do. And one guy took a gamble on me. I got hired at 3 different places. I chose him because of the background, and I heard about the company that was local. People knew about the company well, so they're no longer in business. But years later, there's a lot of buying and selling and acquisitions that have been happening lately, but they're out. But the opportunity was, come over here, and we'll see how we do. So within the first year, my goal was, okay, let's see if we can make $100,000. If we can make $100,000, that's like the benchmark for I can keep this job. And quickly into the game, I was having issues with just kind of getting started. I wasn't getting the right mentorship. I wasn't getting the right information to learn properly. And I was doing a lot of cold calling and just a lot of BS work for this guy. And it took months and months and months of failing to realize that this is not where I wanted to be. It's not what I want to do. When I finally got my first couple of deals, I'm like, why am I going to chop it with this guy? I'd rather just go and just learn on my own. So 91 days later, I quit the team. And he gave me the most motivational speech ever. And that was, you're going to fail.
You're like, okay. I
was like, great. I needed to hear that.
Okay.
So then the moment I got off that team, I then quickly started putting up 1 loan a month, 2 loans a month, blanked the 3rd month. And then went 3 loans, 4 loans, 5 loans, 6 loans, all done within 1 month. And before you know it, he's like, what's going on? Where are you getting all this business from? I'm like, just hard work.
How were you getting your business? Networking,
working with people like you, working with title people, escrow people, working open houses, meeting realtors, and just going out there and just mouth open, shop open.
So one thing, I just want to interrupt one thing, and we'll get back to your story. This is totally jumping forward and we're going to talk about it. One thing that when I think about you or when you come to mind is I have never in my life, myself included, have met somebody who networks like you. And so right now, when you said cold calling, I hate I've never cold called. I can't imagine. I would just because I know when people cold call me, I'm like, I don't even answer, I hang up, whatever. But anyways, I have never met in my life anybody who networks like you. In fact, the way that you and I met, you better remember this, is I was having an event and you came with someone and you just networked with the whole room. And now it's like, I don't even know anybody that you don't know. Oh, I met this person here. Oh, I met this person here. And I'm golfing with this person. I'm at an open house with this. I'm doing this. I'm just always on the go building your business. And in our industry, all in real estate, finance, business ownership, but specifically like the professional industries, networking is so important and people won't do it. I'm like, people won't do it.
It's everything. It's almost as important as like in the business of trying to find sales or whatnot, prospecting. If you're in my business, we're not just we're not out there selling things. It's very relationship based. So I have to gain the trust of the people that I work for to realize like, hey, I'm the guy that on the average realtor out there, they're doing between 3 and 4 maybe transactions a year. To handle that person's average 1/3 of their annual income that's in the palm of my hands while I'm handling it is a big deal to that person. So they've got to realize that I know what I'm doing. I'm going to work hard. I'm going to follow up on any lead that they give me.
That's true.
I come from an old databasing world. So, I mean, I'm kind of, not tooting my own horn here, but I can cold call and lead gen and lead incubate better than most people out there because I've written databases. I know how to database engineer, tables and, I can code in SQL Server. People don't realize that.
That's a lot. That's very overwhelming, but you know how to shake a hand. So I just want to make sure I commend you on that. That's so important. Okay. So back to your story. So you start doing one loan a month, 2 loans a month, 3 loans a month. I remember, there's been times I sit in your office and you have, am I making this up? 20, 30?
33 loans a month was
names on the board?
Yeah. Most transactions I had going at one time was 33 loans at one time.
And you built that from like 1 to 2 to doubling.
I can't believe I have 10 loans in escrow. I can't believe I have 20 loans in escrow. So I can't believe I need 2 boards to fit all of my escrows.
What do you think sets you apart in that? Like if I were to pull any other mortgage lender in here right now, that would probably be like a dream for them. We'll talk about the nightmare side of it, but just the networking? How do you?
It comes from having an extensive network, meeting a lot of people out there and just meeting the right ones. Cause there's guys out there that are, in the beginning I was like, I want to just work with just anyone who'll give me a loan. And then you come across a lot of weird people that are just aggressive and angry. And you come across different types of mentalities. And you're like, okay, I only want to work with nice people.
Yeah.
And then you're like, okay, I need to turn up the aggro level a little bit more. I need to get someone who's aggressive, who's doing good business, but has a good heart and understands what it takes to be a good lender as well. And now I am very selective of who I get to work with. I'm blessed. I get to, pick and choose who I want to work with. But there's the guys that'll give you no business and ask you 100 questions a year, send you nothing. And then there's ones out there that'll just hey man, here you go. Just give this person a call. They're super cool. And sometime this weekend is fine. I set it up a way that they're expecting your call this weekend.
That's me.
Right. Call She's going to give you a call this weekend. She's totally nice. And here's what it is. And I group texted everyone and it's good.
And I group text and everyone's good.
And everyone's
good. Okay. So now you're getting busier and you're learning the process. Did you have a mentor? Did you ever have a mentor?
I caught a mentor at the place that I'm at right now. And it wasn't until, and I went from that first company and I left that company when the guy looked at me. He's like, how are you getting all your business? How are you doing this? I was like, well, I'll do it like this. I work in open houses. What are you saying to them? I was like, you've been doing this for 23 years. I've been doing this for like 23 minutes.
Yeah.
I've now realized there's nothing for me here anymore. Like I can't learn nothing from you. I can do more business than you can. I've been doing this for like 8 months now.
You got to go.
I had to go. So then I went to another friend. I worked for a friend of mine. He was a branch manager at another company that was recently acquired. And I went there and everything seemed like a dream. And then when I got there, suddenly everything changed and their rates changed on me. And it's like, I was losing so much business and my rates seemed like they were out. And, I said, well, I don't feel comfortable shifting and jumping companies again, but it was so needed because I couldn't sell a bad product to my clients. The reason why I've stayed at the company that I'm at for the last 4.5 years for so long is because it's a great environment, good people that can control the situation, good rates, low overhead, and everyone understands what it takes to be successful in this industry. And it was here where I found my mentor who has been teaching me a lot about work-life balance and the wheel of life and the things that I now help and, push towards younger professionals to help mentor them in what they're doing in their worlds. Because I remember what it was like to be mentorless.
Yeah. You don't.
And to try and just figure out it completely on your own. It was super hard. I'm lucky that I was able to kind of go through the experiences of failing so much in the past. And I was like, okay, this didn't work. Let's just shift. Let's just keep shifting and we can like pivot to something that actually works. And then when I finally figured out the secret sauce of how this whole industry works, it's like, okay, now it's easy because I just now know what the recipe is. But to a lot of people who are still out there trying to like whittle the wheel the way they need it to make it work, you can give them something that's going to be a little bit more, map oriented and saying, here's what I did first. I did this, then I did this, then I did this. And then go, okay, I can apply that to my industry a certain way and go and do that. And to much luck, a couple of guys that I've been just talking to who are in different industries are now finding their success and blowing up and taking on different roles now. And they're building their teams now. I'm like, I love it. So.
Okay, let's talk about like blowing up. So a lot of people, they come into an industry, whatever it is, and maybe they're lucky enough to find a mentor. That's a really, really big one to be able to have that mentor immediately. If I was people always ask me like, what would you do different? And I always give like the cliche answer, like I wouldn't do anything different because it taught me so much. But the one thing I will say that could help you just bypass and skip a lot is having a mentor and finding somebody who has what you have. So these younger guys, they probably see not only you're making a great amount of money. I mean, upwards almost $1 million. But you have good work-life balance now. So when I first met you, or not even when I first met you, like we met in 2017, 18, we'd known each other. I remember you would tell me things like, I would call you and you'd be like, oh, and I'm like, you're going to have a heart attack. Like I used to tell you all the time, you're going to have a heart attack. And then one time we were having lunch and you're like, I had a heart attack or something in the middle of the night.
Panic attacks.
A panic attack. I don't know. But remember in the middle of the night, you woke up and you like couldn't move.
Couldn't breathe.
Yeah. And so what happens a lot of the time, I've never had anything like, well, actually I sometimes freak out where I'm just like, oh my gosh, there's so much going on and we need to make money. And sometimes you get a little too focused on the money and I need to be here and I need to be there and I need to be everywhere. And you sometimes want to carry it all and it's so big. And I'm learning right now, I don't know if you agree with this or not, but I feel in this season of life, like small to me right now is big. Does that make sense? Like it doesn't have to be like this big old thing and all this money and all this hustle culture and all this hustle and bustle and I'm not sleeping and I'm having panic attacks in the middle of the night. It can just be like small and we're still making a great impact, but we're with our kids and we're with our family. So what was it that changed for you where you were like, oh, because you were going.
I was going to go down the wrong way for sure.
I think you were already
I was way down that path.
You were, I don't know that you were like rock bottom, but you were definitely, I mean, we all go through this, but it was just like, I remember you made like $100,000 and then $200,000 and then $400,000, $500,000, $600,000. And you say, I'm going to make $1 million this year. And it was just like crazy. And that's all great. But what was it where you were like, because now when I talk to you, every time I call you, I don't know if you notice this, you always pick up my call. I'm volunteering at my kids' school. I'm driving the kids to school. We're doing playtime with the kids, but you always answer me, always call me back. But now it's just all kids, family, time, bonding versus when I used to, I'm working a deal. Oh, I got to go. I have 10 other people online. I'm at the office. It's midnight. So I've seen such a change in you, but I feel like you're 1,000 times just like more joyful and happier. So what was it like and what took you to get to this moment? Because a lot of people, I mean, it's just a roller coaster of life. A lot of people are just in it, in the hustle culture, trying to figure out, is this what I want? Sometimes it takes like a serious situation or like something crazy to get you there. And then you're like, wait, this is actually beautiful. So what was it for you where you were that got you to just like peaceful, but you still make a lot of money?
One word. It was divorce.
Yeah.
That's what pushed it. I was so ingrained. And I remember I put up this post a little while ago and it got some crazy traction on my Instagram. And it was, I think I wrote this one out and it said, my commitment to my life has gotten me where I'm at. And, my commitment to my life has gotten me where I'm at. And so, in the world of business, it got me where I'm at right now with, 70 plus realtors who call me on a daily basis of, I've got a deal, I got a client. And it also got me to a place where, she wasn't able to handle the amount of work that was going through and the way that this world transformed me. It took a lot to go from, I fell into just the roles that we fall into as men and women. And when we were having young kids and she was telling me, hey, I'm pregnant again, it's like I'm making a shift and I'm going into a real estate industry. I wasn't thinking, but I always wanted to sell either money or securities or real estate or a widget or something. And I knew these things like early on in my college years. I knew exactly what I was going to sell. And so when I had the opportunity to finally sell money and get into real estate and mortgages, I thought whatever I'm going to sell, I'm going to kill it in. But then I found a great vehicle to make money, and I never made money the way I make money now. Some of the months that we put up were just back to back $100,000+ months in commissions, and that's something else. Start making that kind of money. I made more money in 1 month than I made in an entire year when I first started.
Which is so dangerous.
It's crazy because it becomes addictive.
Yes.
It becomes very addictive and you start making a lot of money like that. And it starts to, you start to really lose sight about what's most important because you start grinding. Because again, like I told you, we were having money problems early on. She was losing her job and getting laid off and going back and forth. And one of the biggest concerns that I had was we have a kid, we have a mortgage. She got laid off 7 months pregnant, which means she was losing her benefits the next month, 8th month.
You had to have a baby.
And then the baby was coming no matter what. And we're like, so yeah. And then I'm working at a brand new industry for $10 an hour on a recoverable draw on a boss who's a kind of a piece of shit to me. Jeez. So it was a lot. It was really hard to like operate with a gun to the back of my head of you have to perform and you have to. So that kind of pressure never left.
Even when it didn't exist. Like you sometimes feel like, because now you start making money.
Well, you make, that's a great point because when you don't have money, making money is the goal. But when you start making money, the biggest concern you have and the biggest fear and the stressor you have is maintaining that lifestyle. Mm-hmm. So when you get there and you're like, I finally have this and I have like, a great house and I have this stuff going for me and you have a lifestyle going, it's even more stressful to maintain that lifestyle. That's hard. But when you don't have it and you haven't made it, you still have just just getting on first base is, making the money in the first place, right? We can get into another conversation about saving money. Saving money is easy when you don't have money. Mm-hmm. Saving money is 10 times harder when you have money.
Yeah. It's a mindset there.
So same concept of being concerned and having like this role to answer your question in a few less words was, you lose sight real fast. And it took divorce to get to a place where I finally recognized, what's important and what's not. I wasn't around enough for my kids. I was seeing them maybe 10% of the time. I was always at the office. She was playing her role. She was managing the kids. I was managing the lifestyle, the home, the money, the income. And that's what kind of drew us apart. And it was stressful. It was really hard. And I was, and the chase turned me into someone else who was becoming greedier and more focused and narrowly focused on the wrong things, which was just networking and going out and entertaining and drinking and being friendly with everyone. And in the end, I realized that although I do have a lot of friends and a lot of acquaintances that I work with right here, it takes a lot to get to that level to do that. So, to be a master networker, you're constantly tired running around and taking a Red Bull on the way to the next meeting to drink and be on point and run your mouth all day. People love the energy. It's a lot. So when you finally get to a place where you just hit rock bottom, you just go, okay, let's take inventory. How do we slow down? How do we figure out what's the most important? And I just started writing. I got it back to the basics. I started writing like when I first figured out, who am I going to help to get this whole thing started? What loans, what people, what types of clients, what types of realtors, what types of partners do I want? I've now drafted it out with, what do I want in my life? What do I want to spend with my time with my kids? You taught me a long time ago, write your obituary. What do you want to be known for? So I wrote my obituary down. And every now and then you read it and you just go, well, if that's what I'm going to be known for, I better get to work on that stuff. And then it's really easy to kind of like, put into focus what's most important when you can discuss, well, we only have time here. What do I want to be known for? It's real simple.
This is just something that I've learned from my mentors and that I've done along the way is I too am just like a master networker. Networker, is that a word? And I love networking and I love meeting new people. One, I'll be honest, when I first started, probably much like you, it was just for like opportunity. I'm an opportunist in many ways. So I'd be like, okay, let me meet this person. How can we work together? How can we send each other deals? What can we give each other? And it was my experience that became, it just wasn't fulfilling, like just to have a bunch of business relationships. But if we're going to be in business and we're going to be business owners, we need business relationships. And so something that I tried to do is I tried to network around my kids. So that would look, but without any outcome. Like I stopped getting attached to like, okay, what can we do together? What business can we do together? How can we benefit each other? How, and I just started everything I do, like with my kids and being involved in their school. And I'm sure you do this too, but, and in their sports and birthday parties, like I just want to meet people. And I shifted my focus from like, what's the end result here to just like, I just want to meet good people. And I found when I did that, like, well, we go to each other's kids' birthday parties and stuff. And when I met good people, it kind of just flows. I don't know how to explain it. It's just like easy. It became easy to have high energy, and my kids are playing here. And yeah, sometimes we do business together. Sometimes we don't. Sometimes we send a referral. Sometimes we don't. It just all works out. And so I really tried to center my life around my kids, and I feel like it's good work-life balance. And so lately, and you could probably give me a better timeline, but I've noticed your work-life balance has just completely just 180'd, in my opinion. And so now, again, every time I talk to you, you're with the kids, you're at their school, you're doing a play date, bring the kids over, the kids can play in the backyard, and we just do this stuff, and it just flows. It's easy. It's business. It's life. And everything just went together. And then of course we have our days where we're like, hey, I have to work late. You can never get away from those just as an entrepreneur. But are you doing anything differently in networking and like your mentality around it, instead of just like hustle culture of just like, I genuinely just want to know this person and be a part of life with them?
I think I'm trying to find people who are more apt to doing more social media. I can't get away from doing things like open houses. Open houses are like still like the number one way for me to go out and, to meet people, to catch them. I mean, you want to fish where the fish are at. The fish are walking in and out of these houses. That's just, it's a no-brainer science. You're in the industry. Get out there and work open houses.
That was big for anybody who's in the real estate industry.
Yeah, work open houses. It's where they're at. It's just there's no secret there. But to sit there and to run around and pass out flyers and, oh, I'm a lender here, send me business, and walk into open houses and just walking into them and saying, hi, nice to meet you. Here's a box of cookies and some water, and here's some flyers of mine. And
do lenders do that?
I don't know. The weak ones do. Sorry.
I mean, I'm not in the industry. I don't care.
Yeah, but I sit and work the open house. I sit there because working open houses can be a dredge sometimes. You're sitting there for hours just twiddling your thumbs, wondering what's going on. And to actually pass the time with someone who's there, you're building a relationship. You're getting to know someone. You're hearing their story. They're hearing their personal world. You can work on other files in the meantime, but you're sitting there and you're building a relationship. That's what's most important. Mm-hmm. In our industry, we have to be building relationships constantly.
In any industry, you have to do that.
Yeah, we always say, when everyone's got to work a job. Steve Jobs and Bill Gates and everyone had jobs. No one just jumped into their roles. You have to learn how to, mop the floors before you can flip the burgers. Mm-hmm. And right now, you have to learn to become, a loan officer and do it well so you can advise people properly. But once you get to a place where we're at, I'm looking to take on people and to educate and to train and to help motivate people to go out and do what I do and coach them along the way, because it takes a lot to just get there. To do it successfully is one thing. To do it right is a different story.
That's a very good statement.
And I think I was doing it successfully, but I was doing it wrong. And it cost me a lot. It cost me a relationship. I got to say, it's probably the silver lining in the whole thing is that now that I understand that, now I'm a single dad, and I got my kids half the time. Whenever I'm with the kids,
you are with them.
I'm with them. I'm not working with them with the kids, and I'll pick up a phone call here and there. I'll call you right back over the whole thing. Yeah. It's how we always have to be. But I'm definitely not in the corner with with her watching the kids, or I'm with my kids. I'm super involved and super present now. So I feel like I've gotten my kids 5 times more than I ever had them in the past. So the biggest silver lining in this whole thing is that my relationship with the kids has gotten so much better. I have a great understanding of the time that when I don't have the kids, that I hustle more efficiently. Mm-hmm. And the work-life balance is a little bit easier, only because there's also a lot less business nowadays because of the way the market is today.
Let's talk about that.
Yeah.
So that's something that I've been dying to talk about. So you have any house I've ever purchased or sold or anything, you've always been my loan officer. And is that how you say it? Loan officer?
Loan officering.
Loan officer. And so about a year ago, I called you up. I was inside of Chuck E. Cheese. And I was like, I want to buy a house. I just want to buy this house right now, just immediately. And this was a time when the market was really high, and not that it's still not high, but it kind of like took a little level out. How would you say it? And the market was high and interest rates were high. And you told me this, you said, if you were my sister, I would tell you to just chill out for a second. And I was like, okay, I chilled out. And this was sometime last year. And so what I love about you is you're always very open and transparent about good business moves. I mean, a mortgage you're talking about $1 million purchase. Like you're very honest in that sense, where I would see other lenders or real estate, just do it. You can refinance next year, it's next year now, and the rate's still. So thank God I listened to you. But with that being said, just honestly, and I share that story so that you guys know whatever comes out of your mouth right now is like God honest truth. So you know how sometimes people tell you what you want to hear or what's going to get them the sale or what's going to bring them a client? I've never, ever heard you do that. Like you've literally, right now it's not a good time. Wait a couple months. Do this with your credit score. Wait till you're here. Wait till we can do this. And so I love that you're so open and honest, and you don't really find that a lot. At least it's been my experience. So
thank you so much. I appreciate you saying that.
Yeah, no, seriously. You told me if you were my sister, I would tell you to just knock it off. And I was like, okay, I'm going to knock it off. I mean, I really didn't, but
I still told you to knock it off.
I knocked it off. But so the reason I share that is so the question I'm about to ask you, this is the real answer in the real estate world. What is going to happen with the market? Like, do I still have to chill out? Like, would you advise your sister to buy a house now? Would you, what? What's the what?
Let me get my crystal ball. Hold on.
Yeah, I know. But like, would you?
Here's what I do see. Rates, I mean, a while ago, COVID times, rates went down to what? Mid 2s.
Yeah.
And we have to also take into consideration that, post 2008 was the benchmark for a messed up economy. We were coming out of the greatest depression in this country's history. And it was signified with a 3.25 30-year fixed, mortgage rate. That's kind of where things, and they stayed there for like a decade, almost 8 years.
So you're saying from 2008
to 2016.
Okay.
So when Trump got into office and this thing started picking up, we were sitting at a 3.25 30-year fix, no points, regular loan for so many years that was the standard. Okay. And then when Trump got in office, all of a sudden everything started to pick up and start moving. Everyone thought those would be good for business. And then rates peaked as high as 5.25-ish for the same 30-year fixed. And then COVID came around. And when COVID hit, we dropped out of the 5s right into the 2s. Mm-hmm. And everyone started freaking out over, oh my God, this is crazy, because the world kind of came to a stop. And that's not good for money to ever stop. So then suddenly the world got really scared. And so the Fed decided to go and just cut the legs out and saying, hey, we're going to pretty much give away money. They were printing money for everyone, first off. And I think a lot of the reasons what we're going through right now is, we're paying the piper. So when we went from the 2.5s back into the 3s, 4s, 5s, and it came out of the 2s and 3s real fast. It went into the 4s and 5s real quick, and went into the 6s and 7s
overnight almost. It felt like
real fast. And it was, we were expecting it, but it happened so fast that it was kind of shocking. That's what stalled the market. And so everyone just freaked out. They just wanted to see, is the market, the rates going to go any higher than this? What's going to happen with home prices? Because home prices were still and are still teetering near the areas where they were when money was so cheap. And then we were going into multiple offers. I'm going to pay you $200,000 over your list price because the money is so cheap. I'll buy it for $100,000 more than it's worth because I'm still going to get a good deal on my mortgage because it's so cheap. But these prices for these homes are still up there, and they're starting to come down off those really highs, off those high highs. Problem is they're not coming down as fast as we expect them to, because
what I was going to say.
Most sellers are thinking like, oh, well, it's still worth this. It's like my home went from, 900,000 to 1.2, and it's coming back down to $1 million, which is where it belongs. It really does belong around the $1 million range, but it's crazy that home prices are still as expensive as they are. They are dropping, and I am expecting to go into a refinance boom somewhere in the middle of next year. But you have to think that as soon as interest rates drop, the sentiment in sellers' minds instantly changes. Sellers' minds and reactions will instantly move, and they will just start saying, hey, well, it's time to go back into multiple offers, which we're seeing right away. Because a while ago it was, oh my God, rates are 2.5. And now the new thing they're saying is, oh my God, the rates used to be 7.5. Yeah. And now the rates are getting back into the 6s. So now people are sitting around saying, well, it is what it is. It is what it is. Home prices are where they are. I personally think that. You think that the home prices are expensive right now? Watch what happens when interest rates drop, because it's time to get this economy out of a recession that we're denying that we're in recession. But when we get thoroughly into this recession and they have to cut interest rates again to spur the economy back up, home prices are going to just start trickling right back up again. And right now I'm seeing multiple offers where people are bidding $20,000, $30,000 over list price again. And now we're having appraisal problems. So I see what paper crosses my desk.
Yeah.
I see what's happening. So home prices are going to go right back up real fast. So I think if you can get into something right now, what's the play now? A while ago it was a hold. Now it's like, I think you're better off getting into something if the payment makes sense and you can say, okay, well, where will it be at a conservative 4.5 when we refinance out of the 7s or the 6s? If we get back into a 4 point something, consider buying points at that time to get it back into the low 4s or high 3s, wherever it may be. So buying now while the market's softening, and I'm starting to see people putting in multiple offers again. Why? Because inventory is super super low still, so that's propping up the prices of homes.
So okay, one thing I asked myself this question is, I'll see a house for sale, or we've gone over numbers 1,000 times. You're talking a $900 million house, which right now can get you a 3-4 bedroom if we're lucky. Like, we're not even talking $1 million house in the hills. This is just 3-4 bedroom house, nice size backyard. A starter home is pushing $1 million. And if they do that, if somebody purchases $1 million home and they is 20% down, do people do that? Not really, right?
My average buyer is got a sub 700 credit score, between 680 and 720 is normal. And people are putting down anywhere between 5 and 7.5% down. So
10, 20%, that's not
people. No. For a while ago, it was crazy to see how the bank's mentality suddenly shift when they said, because 20% down was great. You're putting down 20%, no mortgage insurance. They're like, what a strong buyer you are. Now they look at you like, oh, you're just barely putting down enough to not have mortgage insurance. They are more apt to giving a better deal to someone who gives 15% down. You put down 15%, carry mortgage insurance, so that if and when you have a problem with your life, your job, your industry, or whatever, COVID related or something in the future, we don't know, murder hornets, right?
Mm-hmm.
Right.
At this point.
That the banks are going to get covered by the insurance that you have to pay for that covers the bank's ass. So suddenly you're looking at it saying, wow, the banks are going to get a better deal. They're almost enticing people to put a little less money down than 20% to carry the insurance that covers them in the worst case scenario.
Okay. So you've never shared that perspective with me. That's interesting. It makes absolute sense. The banks are just banks.
Seen it happen a couple times. I mean, nowadays, I mean, and what's crazy that, have you heard this thing everyone's talking about? They're called LLPAs, loan level price adjustments that are coming down to, if you put down on your low credit score 5% down versus the guy that's got great credit and putting the same 5% down, that the guy with better credit scores are now subsidizing the lower.
I've seen that everywhere.
You've seen that. Everyone's talking about,
is that accurate?
No, it's so blown out of proportion because of what the media is saying out there. There's some sort of agenda or narrative that they're trying to push that I don't want to get into the politics and the religion, aspect of things. But I tell people that back in the day when it was a 4% time, that the guy with great credit, that was a 740 credit score, 740 to 840 was the same. And that guy was getting a 4%, let's just say 4%. Where the guy that had like a 650 credit score, or 630 credit score was getting a 4.7. That spread was like, what, 0.75% on your interest rate. And then nowadays, the guy that's got great credit is going to get like a 6.625, and the guy with bad credit is going to get like a 7.1, 7.0. So now it's like 3/8 to 0.5% difference between great credit and credit. So the margin of, like the spectrum of where you go from good to bad credit has just shrunk. That's all that's really happened. Mm-hmm. So if you're out there and you're thinking that you should go out there and default on your payments, your credit cards to get a lower credit score so you can get a better interest on your house, don't do that.
It wasn't explained properly.
Don't do that. Don't get your news from TikTok.
So even, unless it's the Money Mom channel. So even with, let's just say 5, 6, 7%, whatever it is. Because you and I have run numbers so many which ways, when I want to buy a home one week and then the next I want to buy a vacation property in Big Bear and then I'm in Florida and then you always tell me to chill out. But we've ran numbers a million which ways. And over the last 18 months, we've run numbers from us putting 5% down to 10% down to 20% down to we just played with it. Every time the payment is well over 6, 7, 8 grand, depending on what scenario I bring to you. How are people expected to pay something how could somebody take on a $6,000, $7,000, $8,000 mortgage and still live life in this? How are people able to do it? I don't understand.
That's the reason why we're a little slower nowadays.
Okay. I'm just having such a hard time wrapping. But then I also think this. So the other day, my husband and I were on a walk and we walked through our neighborhood. And I just was telling him a couple stories. I was like, I used to know someone who owned a home on the street and it got foreclosed. And I told him the whole story. And then we're walking. And then I'm like, I also know someone who lives on this street and they bought the house at this much, which was like, I don't know, 500-600 grand. But now the houses are going for $1 million. At that time, when it's my friend's parents, when they bought this house, did they think like us? Like, oh my gosh, how are we going to afford a $2,000, $3,000 payment? So the way we're thinking now, in 10 years, are people going to be like, I wish I had a $6,000 or $7,000 mortgage?
Totally.
How?
Well, I think that if you look at the way the numbers were back in the day, my parents bought their first house in Van Nuys, and I think they paid $36,000 for it, like $50,000 for a house back in the day. Oh, but it was like 12%, 16% interest rate. And I'm like, let me calculate the payment on that. It still didn't pencil out, but he's like, well, hold on. The dollar difference was a lot different. So the purchasing value of the dollar was stronger back then. I get it. Inflation,
but it's still
inflation's inflation. So I'll still give them that. But I look at it saying that if the home prices continue on the same path that they have been in the past, I heard the stat a little while ago that homes in our area and across the country are expected to go up by 3 times their value.
How?
So inflation. I think that things just keep going up and up and up in value. It's like it's the reverse, wave. It goes up and then it comes down, but it goes up a little bit higher, but then it comes down, but then it goes up even higher.
Consistently, it's going to
it just keeps doing that. So
increase,
I think everything just keeps getting more and more expensive. And if you think that waiting it out, it's the play, it's not. Because like a while ago, I told you should probably settle down because they're just going up and up and up. Settle down, hold on, wait for this thing to taper off. Now I'm at a point where I'm starting to realize home prices are starting to come down a little bit, But now they're starting to get a lot more people who are like, well, this is the standard. Let's get out there and swing at something. So there's a lot more motivated buyers who are still in the position of, I want to get out of my parents' house. I want to move on with my life. I'm trying to get married. I know so many people I see come into open houses. They're like, so we're living with his parents. And I'm like, so you're trying to stay married, huh? She's like, yeah, I'm trying to stay married.
You gotta get
so
out.
we got to get moving. So they know that life has to keep on going. People are going to die. People are going to get divorced. People are going to, life keeps happening. So homes will keep moving. Money just can't sit still. But I tell people, if you can weather the payment for at least another year or so, and we go from a 6.5 or a 7% rate, depending on their situation, back down to a 4.5, your payment will do this. Now, I'm not guaranteeing anyone that, you have to be okay getting stuck in this payment for a while. But I'm also saying to people, I expect the refinance to come back around and to be somewhere back in the 4 to 5s. Even if we're in the 5% range, that's normal. We were selling homes all day long at a 5.25, 30-year fixed, no points a while ago. And it was just status quo. It was just normal markets. And we were picking up and doing busy. We were getting busier and busier. I was ramping up during those times. 5% is normal.
Okay. I'm just playing devil's advocate here. Mortgage and real estate. I go to you for all my advice. But so I don't know if you've told me in the past, right now it's not comparable to 2008. But in 2007, 2006, like banks were giving away money. They were giving away money, right? And everything happened the way it happened. Everyone lost their homes. So I just think of, we sold our house about a year ago at the tip top of the market, just like.
Good for you.
Tip top. I had the best. I had a 2.5 interest rate, and now it's this whole thing, but tip top of the market. And the woman, a husband and wife bought it. And now I see homes in that same neighborhood, like comps or comparables, however you say it. And they're selling for $100,000 less. So now what happens to that person? She can't be the only one who went through that, who bought at the tip top of the market with a 6% interest rate. What if she just says, I can't pay this anymore? Like, I can't do it.
Foreclosures are going to be coming.
That's what I was looking for.
Yeah, foreclosures will be coming. People will be losing
You don't have a crystal ball.
Crystal ball back over here.
Foreclosures coming.
It's going to come down to what happens when people start losing their jobs. I mean, how bad does the recession have to get where we start having food problems, money problems, job employment problems? I've got a friend who's is in recruiting, and the recruiters are losing their jobs. So, times are coming where we're going to start, laying off and doing more of that. And it's happening. I'm watching tech industries laying off.
Everything's
we're not laying off 5 or 10%. We're laying off 20 and 30 and more percent at a time. And you're like, wow, they just cut a lot of people.
So can these people even refinance when the time comes?
Well, you kind of need a job.
On
top of the fact they buy at the tip top of the market on a bad interest rate. Now that home is devalued.
Thank God you told me to job.
Yeah. And now you're looking at people are going to have a hard time and going to be stuck. They're going to be stuck. And if life gets lifey and they suddenly lose a job, then naturally they're going to say, well, and here's the reason why, foreclosures may not be, too prevalent. No one's forced. I mean, the person who bought the very tippy top, yeah, they might be screwed.
But that was a short period of time. This wasn't years.
Yeah, correct. So I also feel like we're in a time right now, like I told you, back in 2020, homes had doubled or had gone up around 30% in price just because the rates were so low. Home values increased over a 2-year period by 30%. Now, I think that there's so much equity in these homes still because there's such little inventory that home buyers are just picking them up for whatever they are because they're just saying, it is what it is. I make good money, and people are out there making a good $250,000 a year in their jobs. They're showing the income. They can afford the homes, but making that payment, that's a different story. Now, everyone knows that if the moment they can refinance, they're going to refinance. That's kind of where someone like me will come in there. We're watching the market constantly, just waiting for it to drop. As soon as everyone starts dropping, we're like, just get your paperwork together. Let's go. And just get the refinances going because that's the moment they can start getting some reprieve from these payments. But until then, they got to be prepared and okay with that payment until the crystal ball, says it's going to be in a couple more months. But again, there's indicators that are out there saying that when the jobs start getting, cut, when recession really starts settling in, how are we getting out of it? The same way we've always gotten out of it.
So it's a very sad story in Song and Dance, what we're talking about, but let's turn the page for a second. What does it mean for someone who's going to seize the opportunity and who's going to say, I'm going to be ready for the foreclosures. And I'm going to, because a lot of people picked up a lot of houses in 2009, 2010.
Remember this, when it comes to the foreclosures though, I don't think they're going to be happening in the way that you think they are. Only the very people who bought at the very top that have issues trying to get rid of their home, that might be an issue because there's so much equity in these homes now that people have bought over the last couple of years that they're going to just sell it before they ever go into foreclosure. So they're going to sell it off. So the foreclosure might only happen for a small window or this little tippy top white cap of the mountain that bought it at the very worst time. And now something struck their family or their household with some job loss or
so we're
death
not
or
talking
something.
2008, 2009.
No, it's not happening like that.
But there will be opportunity out there.
There still will be. So unless you're prepared and you're ready to go, things like that in those situations move so fast because there's people that are out there in droves looking for the deal, looking for the right home. And as soon as a home pops up, there's at least 20 people ready to go for it. So if you're like, oh, well, I'll just get ready when the time comes, you're going to miss the boat.
Okay, that's important then. You have to get ready.
By the time you read about it in the Wall Street Journal, it's too late.
I really appreciate that crystal ball of yours.
Yeah.
Okay, so I'm lucky enough. The conversations we've had, absent a few things, I mean, we talk like this on the phone all the time. I'm like, what about this? What about this? What do you think about this? And so, like I said, I always appreciate your real, open, honest response. So how can somebody, a lot of the time, I mean, I was like gearing up before we bought our first house for years. I feel like you were like, do this, do that. And then we waited and it all worked out and we struck when the iron was hot. So I would just want to tell, like, at least my friends in California, my family, anyone who's watching, just even having a phone call. I've sent 1,000 clients to you who I talk to them and they're like, we're not ready now, but David told me to do boom, 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 boom. And then we're going to be good to go. And that's what you did for me for years.
The path of the path to home ownership is like a yellow brick road. I mean, they're going to be, let's handle your student loan stuff. Let's take care of this few collections that might exist. Let's get
save this much money,
have this much in reserves. So that way, you know that when you get into your home, you've got 6 months of payments. And in my case, when she lost her job, when she was laid off again, when these things happen and you have to be prepared for it. You can't just think, oh, well, I'm going to just fly by the seat of my pants on this mortgage here and life will just be perfect. Everything will be fine. No, life's going to get crazy and off the rails. And when you lose your job, not if, things happen,
You want to be prepared.
You never know. Things happen. So always save your money, save more than 10, 15% of your money. That's a very big one of mine. Mm-hmm. Live within your means. Which
really quickly, I was going to wrap this thing up and land this plane, but I changed my mind because I love this about you. Saving your money and things like that. So being in mortgage, like I said, I would walk into your office and I would see 30 names on the board and I made $100,000 last month. I made $150,000 this month, whatever it is. So now the last year, is it fair to say that your months haven't looked like that?
Hardly.
Okay.
Hardly.
So
by like they've been slashed by 10 times those numbers.
So that paired with you going through a divorce, paired with you becoming a single dad, you kind of got a storm here. But you're doing the best you've ever done.
I know, crazy, right? I mean, it's all perspective. I mean, another great one is that, things don't happen to us. They happen for us.
Yeah.
And so a lot of great things have come from this. I've got a better relationship with the kids. I've got a better understanding of who I want to work with. I have a great understanding of the time and the efforts that I put into work, where I work, who I work with, and what I do, how efficient I am with my time is very important in my world. And I find it that I'm able to be more present in my own life, and I'm not just showing up for my kids, but just I'm able to have me time. I've just started playing piano again. I started painting. I started doing a lot more things.
You painted this up here.
Oh my gosh.
But okay, so with that being said, the one thing that saved you was you do save your money and invest your money and stack your money. That's why I brought this up, because having the mindset of being a saver, I mean, you made almost $1 million in a year. You probably weren't thinking, oh, what's going to happen when my income, because you're like, I'm hustling. I'm a networker. I got
a good one for you. Yeah. This too shall pass. It's not just for bad stuff. It's for good stuff.
Ooh.
Everything's like you said, there's seasons for everything, right? So when it was, hey, I need $5,000 or I need $6,000 or here's how much we need for the bills this month. Okay, great.
Because you were saving and you had a saver's mindset.
Saved every dollar during those couple of years. So it's like, oh, you need $6,000, put the rest in the bank. Oh, you need $5,000? Here he goes, put the rest in the bank. And I never spent more than just the bills that I needed to. And I just stacked it and stacked it and stacked it for years.
That is so important. I mean, my we didn't even plan to talk about this, but it's so important because we never think it's going to happen to us. Or we, or especially for like A-type, we're like, oh, we'll figure it out. We'll get it out of that mess.
I used to be like that. I have been there in that mentality, and
too.
I've made the million, lost the million, lost everything, and it's something else when you get your cars repoed. You when,
hit rock bottom.
When you get your first car repoed, they want the balance of the car. I'm sorry, they want the balance of what you owe them.
Okay.
When they repo the second time, they want the whole car paid off. You only know that if you've been there.
Okay, I'm like,
I've been there. So,
I never had a car repoed, but once I had to turn my car in because I didn't make the payment and pay the difference.
Humbling. I can tell you what it's like to go from an 800 credit score to a 400 credit score back to an 800 credit score, and what it takes. Doing credit repair for people is something that I've loved to do. And I sit down and I'm like, here's the roadmap. You are nowhere near buying a home. This needs to get fixed. But here are the people that can help. Here's what you need to do. Here's the credit cards you need to open up.
And you're such a resource in that area because you're the king of networking. Like, everybody. It's so, I know all this about you, but like the ups and downs.
It's life, and it's not the destination.
But a lot of the times we just see it like, especially on social media and on, like these guys or even just these businessmen and women, it's all just like up here. But no one talks about like, I couldn't breathe in the middle of the night, or I lost it all, or, my family fell apart. And so I'm so happy that people get to see this and
totally
be like, it's real. And then you're so honest about everything. And it's awesome. I have one last question for you before we wrap it up, and I want everyone to know how to contact you. But I haven't asked you this.
Okay.
I think you'll tell me the truth.
Okay.
You've never not. Was there ever a point over the last 12, 18 months where you're like, I'm not going to be in mortgage anymore? Like, this is just not going to work. Or did you ever feel like it's not going to work?
It's still a great vehicle to make great money in.
Mm-hmm. This is more about the mindset, not necessarily the industry.
Yeah, no. Yeah, I like I said, I'm trying to work more efficiently with my time nowadays. I found great resources that I've employed, and people that I've hired, and things that I'm doing now where I can push on some of the things I used to do back in the day, which is collecting documents and running credit and putting applications together. I can have someone else do that for me now. Going out and meeting people is everything to me. So meeting the realtors, meeting my partners, and doing the networking stuff that I thoroughly love to do.
You're so good at it. It's so natural. You just have the gift of gab.
I love to do it. I love sitting in these sales meetings where I sit there and I learn. And they're like, what you need to do is work on your body language. And oh my gosh, really? And I'm like,
people get caught up in the weirdest stuff.
I learned this at 15 years old. Like, I've been selling since I was a kid.
But not only that, in the finance industry, I find people getting caught up in stuff where they're like, what do you think about our presentation and our forms? And I'm like, none of this.
Who cares? I tell people,
they get caught up in it and then they focus on it.
Yeah. Stop with all the nonsense. It's ready, fire, aim.
Not everybody thinks like that.
Just go on and do it. You're not going to do it right anyways. Who cares if you suck? Just start doing it.
And then you just fix it.
And then just fix it along the way. Everyone's like, oh, I got to make sure that my set is perfect. My videos are perfect. No, I don't care how bad or weird I look, or my hair didn't look right in that video, or
does my hair look right?
Your hair looks great. But to get to the point of, is it what I want to do and where I want to be? No, I think my real passion is going to be in doing, public speaking events.
Okay.
And teaching people a lot of there's a new Instagram page that I'm going to start soon.
Okay. Tell us all about it.
It's called Money Financial Freedom.
Okay.
Because in the end, it's not about the money that we're chasing. It's the freedom that we want.
The time freedom.
So yeah, now does money, give us those freedoms? Absolutely. Well, how do we get into a place where we have made our money? We've learned to make money. We can start our businesses, go from, self-employed to an entrepreneur mindset where you're now a business owner and you don't have to work for your business anymore,
mm-hmm.
right? Last podcast. Mm-hmm. And you get to a place where suddenly money starts flowing passively. How do we get money? Why do I teach people that you should not be putting your money in the bank? You should be putting your money into securities and putting it
Don't get me started.
Right. Well, this is your world, right? So I tell people, like, there's that whole realm that I'm trying to get into where I can start teaching people how to save money, because I never save 15%. I saved 85% of my money. 85% of it. I just take all the money and just put it over there. And then what do you need for bills and what do you need for taxes? And that's it. And I sheltered all of it. And you just live within your means, Why do you drive that car? It's old. I don't care. Why are you driving those same pair of jeans? I don't care.
Yeah, you're not very materialistic.
I don't
That's
care.
why I'm telling you guys, big is just not it anymore. It's like the small, I'm with my kids. I don't have stress. I don't have the $7,000, $8,000, $9,000 mortgage it's just not.
Live within your means.
It's not, yes, but it's even just like, I just want to be with my kids and create experiences. I never want these moments to pass and me be like, I was so worried about a mortgage or the big car payment that I couldn't come home, or I missed the softball game, or I missed the winter, spring, whatever, all the performances. Like I never miss any of that. And that's why I'm saying it's just small and present and circle and experiences and your kids and your family and your safe space. Like that's it right now.
It's everything.
It's
because in the end, no one else cares
at all.
No one cares
at all.
There's so many videos I've seen online that I'm like, okay, about 20 minutes after you're dead. And I was like, wow, that's
like they replaced you at your job.
I think you saw that same video. Yeah,
I did.
Yeah, replace it. Yeah, everything. And so I realized I'm like, I'm not here to people please. I'm not here to worry about what you think or what I should be doing, or I know what I should be doing. I'm gonna just work on my family, work on my business, work on my home, and work on my future.
So
and
good.
Just find someone who wants to roll that journey with me.
It's so beautiful.
Keep it simple.
It's so beautiful. Okay, so how can somebody follow your pages, or we'll my husband Joe, he'll put all the links and stuff below, but how can they contact you? How can they reach out to you? What can they expect? I mean, my recommendation's 1,000 times out of 1,000 for you. And so,
thank you.
You have all everybody I know, which is a lot of people.
No, I think trying to get, if you want to get a hold of me, you can call me on my cell phone. My cell phone rings.
Always answers.
Yeah, it's on airplane mode. That way I won't get, 30 calls in the middle of this whole podcast here. But you can reach me at 818-441-2605, or you can follow me on Instagram at The Wolf of Westlake. So
awesome.
Yeah, I'll have a new page up soon for that whole money financial freedom thing. So
I'm excited. And then I would like for us to redo this in a year. So what's today? May
16th?
16th-ish?
16th.
I would like for us to redo this in a year and just document our progress, and see what has changed, because it's just all a journey. We're people of a journey, not a destination.
I love that.
Awesome. Thanks for tuning in, you guys. So excited for you to see what's to come.